So we've just had the first week of January, and I wanted to cover two themes that I think are appearing in the markets, maybe even a third one, and where I'm now positioning my capital as flows are going into those industries and sectors. I wanted to cover these three themes throughout the video and also share with you guys some ideas that I have within these themes, the trades that I'm taking, the trades that I have taken, and the new trades that I'm looking to take in the next few weeks as I'm seeing the themes progress. So let's get right into it. I want to cover a little bit what's happening on the S&P 500, and then I'm going to show you those themes within the S&P 500 and the market as a whole. So look, here you can see last week we have had a generally bad week here. So overall, most sectors were negative, except a few of them. So if we go in here, we can see that semiconductors, or NVIDIA in particular, was doing really well this week. And we've seen the whole semiconductor market move in the right direction this week, and I'm going to cover a little bit why that's happening and what is the cyclical play here a little bit later. And then the other industry that I'm seeing is energy and minerals. So you're seeing energy, minerals, utilities here. So we've had oil prices move up higher out of those bases that they've created. I'm going to cover that also in detail here. And some of the stock picks that I have here, as well as in semiconductors, I have 2 or 3 stocks I'm looking at that I'm trading that isn't NVIDIA, that I think have higher growth potential than NVIDIA within the next 2 to 3 months. And finally, I want to cover EVs. As you can see here, Tesla sold off. However, I'm seeing signs that these smaller EV companies are picking up. So potentially we have here a situation where money's flown in or out of Tesla into these other EVs, but maybe we're also seeing the overall EV and renewables market doing pretty well in the early January period, maybe in the next 1 to 2 months. So these are the 3 industries I'm going to cover. I wanted to go straight into semiconductors here and go into what I think is happening with semiconductors. So what we've seen recently is since March or February of last year, we saw a rotation developing. So there's a rotation between software and semiconductors. So in Feb, we saw a reduction, a decline in software stocks as semiconductors moved further up in this run. And then we know that NVIDIA carried the market for the large part of the early to mid section of 2024. Then we saw NVIDIA and semiconductors drop off a little bit, consolidate around certain levels, while we saw software increases. So Wall Street is cycling their capital within these 2 industries. My thesis early in later in the year around December was that we were going to see money flowing in again into semiconductors as it was flowing out of software. However, we might see both of these industries doing really well. The one I want to focus in on is semiconductors, especially after finding multiple support levels here on this SMH versus S&P chart here. Now, the number one semiconductor company to look at is NVIDIA. This is why I want to cover NVIDIA really quickly. So if we go here to NVDA, we can see where NVIDIA is. And I'm going to do a little bit of an analysis here where I think it could potentially go. What is the potential upside? We're going to be looking at the technicals. Obviously, there are a lot of fundamental reasons why NVIDIA can do really well. As you can see here, this support zone corresponds almost perfectly with the other chart that I showed you with the whole semiconductor market. So 1, 2, 3, 4, you can even count this section here, 5, and then we're now seeing this breakout last Friday. Basically, on Friday we saw the push up higher. We had Thursday and Friday moving up higher after the bank holiday period here in the UK and the break in the markets on the 2nd of January. So this is an early sign now that we're probably going to see semiconductors doing really well. And the opportunities that I'm seeing in the market are actually in the ETF. So I'm looking at SOXL as an option here. This is a 3x ETF of the semiconductors. As you can see here, it's a lot more interesting as a chart compared to Nvidia. Yes, Nvidia has a lot of reasons why it can go higher, but when we're looking at charts, we want to be calculating risk reward. If we're looking at this one, the risk reward here is much better when you're looking at a 1 to 8 when it retests these July highs of 2024 for the semiconductor industry. So if you're looking to invest a portion of your capital, for example, you want to risk, let's say 2 or 3%, let's say 2% in this trade. If you're risking 2% here and you're making 8 times that, you're making 16% on just one trade on your overall account. So this is why I focus a lot on risk reward ratios rather than percentages. Yes, of course, this can make 122%, but the risk reward ratio is what really matters in this situation, because you're not going to pull in all of your capital into semiconductors. This is the number one pick for me. Now, if you're looking for individual stocks, AMD is looking very cheap. For me, it's not really ready personally. I know a lot of traders and institutional investors will probably look at the chart for AMD and think that it's ideal because it's heavily oversold. We're just waiting here for the chart to come up. Right, so we've seen with AMD a huge sell-off here. I was looking originally at this area here as support. It obviously didn't keep this support. It sold further. And now, if we're looking at this support area, it's actually a previous historical base here around December 2023. So this is a very nice level. If we really believe that this is the final level, it's a very nice level to look at potentially for a buy. And something that's really appealing to me here is we had a bottom, then we had a little move up, and now we're having a higher low here. And what I'm looking at around this level for potentially if we're going back to all-time highs, it's a 1 to 12. But if we get into some decent levels like this previous level, 175, from 125 to 175, you're looking at 1 to 7. So again, very good risk reward ratios here. You're risking 2% of your account. You're making 14%. If you're taking 2 or 3 trades like this, you're risking maybe 10% to make around 70%. So that's another option that I have here in terms of what I think is very good. If you look at the RSI here, oversold as well. A number of other factors, maybe the weekly chart might give us some information as well. Again, like I said here, historical base. This could also be included as a base here. And a huge upside potential there. So very good with AMD. I'm just looking right now at the charts, but I thought I might share this with you guys as a great opportunity here. So as you can see, it had an IPO it's been basing here for a long time. Then it dropped significantly in 2024. So we've seen a huge drop on the chart, and then a significant basing period here from September 2024 to now. So with that basing happening, the likelihood is there's a huge period of accumulation here from institutions or other players that are loving this semiconductor, and we can potentially see a break above here. And again, we get a 1 to 19 on this one if it goes back to these historical levels of $12 per share. At the moment, it's around $2.50. But even if we get to previous levels like $5, $5.80, $6, you're looking at 1 to 6, 1 to 7 again. So very good risk rewards. So Nvidia is obviously the top dog in the industry. It will do really well. but I am looking at other opportunities within the sector for that better risk reward ratio, just because we don't know when Nvidia's share price rise will end. Yes, we can look at the fundamentals and the financials, they're forever growing, but eventually there will be a sell-off that will be significant, and we have to be a little bit more cautious. You can invest in Nvidia, also invest in some of these other ideas if you're looking to diversify into some other opportunities. For me, these are the best ideas that I have, and these are the best trades that I'm looking at in the next week. So semiconductors, very, very good. The second sector that I wanted to cover was energy. And the first thing I wanted to do was look at US oil and what's happened. I've already invested in some energy stocks prior to this video, which was last week, the first week of January. Today's the 5th of January, so we've already had a few days of trading. But as you can see here, I was looking at this basing period and consolidation period for oil. Multiple retests of this area around 67, 65. And then we had the move up higher, and there's multiple resistance here. Once that resistance broke, this was a very, very nice level to start looking to buy energy stocks. So energy stocks have been doing really well. One of the stocks I really like and have already invested in is ESSO. So ES, you can see it here. Right. So with ESSO, my entry was around this 31st of December high. So we've had a little bit of a breakout from the basing area here, and I was looking at this level as a potential level. And we've also had a bottomed out area here on the RSI and multiple other factors. ESSO is a French and European stock. So I was also looking at European stocks for that kind of turnaround in the whole European market, especially the French market. So ESSO was one of those stocks, and combine it with the fact that I was looking at oil as well and energy, it was like a perfect combination that we had oversold French stocks, oversold oil, and then we were looking at potentially a breakout here. So with ESSO, the risk reward ratio, because I entered around this area, the risk reward ratio is around 1 to 4 on this previous high. And if we do get a significant move, so the previous high was around 144, I entered around 110, 19. If we go back to 200, we are getting a 1 to 11. Again, the risk reward is the most important thing for me as a trader, and especially as a swing trader. And these are the kind of setups I'm looking for, where I can get these kind of asymmetrical returns. I'm getting 1 to 10, 1 to 5, 1 to 20 sometimes. And this was a great opportunity for me to go into that sector. The other energy related industries that I was very bullish on were natural gas stocks. So one of those was LNG. I really like this going into the late December period, going into Christmas. This was the area that I was looking to enter here. And at the moment, I've bought up around the area 215, and I'm expecting a retest of this area here for 1 to 3, but potentially we can go much higher. And the theme here is, and we're looking at the RSI as well, why it could go a lot higher. The theme here is data centers are going to need energy. The short-term solution is natural gas, right? So we're looking at oil and natural gas. We're looking at existing energy systems, especially in the US, for the supply of energy for these data centers in the short term. In the long term, we have nuclear power and nuclear energy. There's many solutions there and ideas that I have, and I'll be sharing in the next few weeks when those setups happen. But at the moment, natural gas and oil and energy, the energy sector is doing well. Uranium is also another sector related to energy. Again, that I think will pick up. This is the ETF. There are some stocks I'm looking at, but I haven't fully decided that I really like them, so I wouldn't want to share them here with you guys yet. It's something that I want to assess a little bit better. But if you look at the uranium ETF, there's significant upside here, potentially, and then we have levels that we can hit historically because of that demand in nuclear. So we have three stocks there, and finally we have another oil stock that I like, which is Oxy, OXY, showing really nice swing trading opportunity here. I actually entered around this area here on the breakout, and the risk reward is a little bit lower because I put stop loss a little bit deeper around this area here. It's around 1 to 4, 1 to 3, but I'm looking at the percentage here, making probably around 15% on the money that I'm putting into energy stocks, which are a lot more stable. That's energy covered. And finally, I want to cover EVs. So if we look at EVs, the number one EV stock is Tesla. For those of you that are following me on Telegram or are part of my Telegram, you will know that I traded Tesla. And if you want to go and join that Telegram group, the link is below in the bio. You would know that I traded Tesla off earnings on this candle, and I traded it multiple times previously as well. So I traded it here, made a few percent. Also traded up here around this level, made around 20% here as well. But this was the main trade that I had, and it was a combination of the fact that Elon is working with Trump. Trump was likely to win the election, but also we had a good earnings here from Tesla, which drove the share price higher. So I entered on the 23rd of October, and then we had that push up higher around the 6th of November, and then moving forward. So I've actually sold Tesla on the 31st. So I sold Tesla, took profit around this area of 417, 415. It was a 1 to 7.8 risk reward ratio trade for me. So if I've risked 2 to 3% on this trade, I've made around 14 to 21% of my overall account balance on just this one trade here with Tesla. So this is why I do swing trading, like I said before. It gives me those high risk reward ratios. Now, what I'm looking at Tesla is, after this sell-off, I'm looking for another consolidation basing period here. It could look like something like the path that I've drawn here, but it could also look like something else. So it can look a little bit deeper, can go a little bit tighter, can move a little bit higher. We'll have to see. My next trade with Tesla, I'm expecting around 40%. So I think it can go around 630 or higher. We did hit around 490 here. We're around 400. So that move will give me another 40% on this trade with probably a risk reward of a 1 to 4. So 1 to 7, 1 to 4, and then we can keep on accumulating on this trade. Tesla's very good, but with the sell-off in Tesla, what I ended up doing is I ended up buying some other EVs that were doing really well. One that I missed was Rivian, which did exceptionally well. It's a shame that I missed it. It is what it is. One that I didn't miss was Lucid. So as you can see here with Lucid, coming off this base, the second push up higher is where I traded. And now I'm up around 23%. I've already achieved a 1 to 3 risk reward ratio here with Lucid, but I'm looking for around 1 to 7. Again, very, very good risk reward ratios here. And I think money circling out or flowing out of Tesla and then going into these other EVs is actually what's happening here, because I ended up buying on Friday Polestar on a breakout as well. So I've previously traded Polestar. Again, I shared this in the Telegram group. So if you guys want to be a part of that group, you can go and join via the link. Free ideas. I don't charge anything. I'm not looking to sell you anything. So related to signals or anything like that, you can go and become part of that group. What I will say, though, is I made 70% on that trade. And then since then, we had a significant fall all the way down to the level that I entered previously. Now, at this level, I was looking at re-entry and I wanted to get a breakout out of this channel. That's exactly what we had on Friday. So that momentum push here gave me a good sign that we have upside potential, not only in Lucid and Polestar, but now we have, I think, in the whole EV sector. And this one is a 1 to 5.7. If we go back to the previous high, which is around $1.90, I think we can go $2, $2.50 here on this one, which could be around a 1 to 8 as well. So very, very good risk rewards here. The final EV play, which is linked to another theme, which is the China theme, for me is NIO. Right, I don't know much about NIO, but the price action is telling me that it's moving with other EVs, and I really, really love this basing period here around $4.3, around 4.7, 4.75 is where I'm looking to enter for a 1 to 6 risk reward here, around 63% on this trade. Maybe even better here, because if we can raise this stop loss a little bit higher, around 1 to 7. So these are the three themes I'm seeing early Jan. I think money is flowing into, and that we could see huge upside potential. Like I've said throughout the video, most of these are 1 to 7 risk reward ratios. So huge upside there. If you're risking 2% on any of these trades and you actually achieve 1 to 7, you're making around 14% on your account. So you outperform the S&P 500 average for the last few years on one trade. So some really good ideas, in my opinion. Have a look, assess them. And if you guys want more content like this, please subscribe, because I'm looking to make more content, more videos on YouTube. And also go and follow me on Instagram, TikTok. The links are below in the bio. And finally, go and become part of the Telegram group where I share these ideas throughout the week. So you won't miss out on these opportunities. For example, Polestar was one of those ideas. And Gevo has been one of the ideas that I shared a few weeks ago and that popped off, which is outside these three themes that I shared here today. So go and follow, subscribe, and see you next time.